please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Now, the big story is the Insolvency and Bankruptcy Code, which may soon be in for some significant changes. CNBC TV18 learns that these changes are likely to center around the definition of related parties, of the erstwhile promoters of the company that's under the IBC. But the tweaks being considered do not end there. CNBC TV18's Sapna joins us with more details. Sapna, take us through the key changes that are being considered, apart from, of course, the change with regards to related party transactions.
We are given to understand that a number of issues are on the table in terms of further simplification of the Insolvency and Bankruptcy Code, or rather trying to clarify the ambiguity, trying to remove the ambiguity. So first off, clear indications coming in from government quarters that there are unintended complications arising out of probably a wrong interpretation of Section 29A of the IBC. Now, this is a section that deals with, banning the promoters and the related parties and related persons, connected persons, also probably associated companies, from bidding for their stressed assets if they are found to be defaulters or if they are suspected of malfeasance. So, on this line, particularly as far as the related parties are concerned, the government may like to come out with some kind of clarification, or whether that will require changes in the IBC itself in terms of amendments, or whether that can be done through the rules modification. That is something that we have to wait and watch and see. But this is definitely high on the agenda of the government, and there's already an insolvency law committee that is looking into it. So those recommendations are expected anytime between 10th and 15th March. In fact, we're given to understand by 10th March. After that, quick action is expected. That's one. Second, of course, even in terms of the 0 to 180 days period given for the resolution process right now, clear timelines are going to be fixed on that front to kind of hasten the resolution process. The third aspect, of course, and this will be very important, would be clarity for home buyers. Would they be operational creditors or they'll be financial creditors? So far the government has clearly indicated that they'll get a fair deal. So we have to wait and watch and see what really happens on that front also. Other aspects also equally important. For example, promoters of sick SMEs, they may be allowed to bid for their stressed assets, unlike the other promoters which have been banned. So there could be a separate treatment for SMEs. And last but not the least, but also cross-border insolvency may be included in IBC.
Okay, thank you, Sapna, for that. But the Indian banking system is rattling a serious crisis. So what's the way out? At CNBC TV18, we spoke to Montek Singh Ahluwalia, former finance secretary. Let's listen into what he had to say.
The Reserve Bank is probably in a much better position to regulate private sector banks than it is to regulate public sector banks. I mean, for example, if the Reserve Bank finds something fundamentally wrong in the management of a private sector bank, it can change the CEO. It can't do that with a public sector bank. The important thing in the public sector banks is to take government ownership below 50%. I mean, the critical thing is, if the government owns 50% or more, then the bank is subject to all kinds of rules and restrictions by virtue of government ownership. The government could go down to 30%. It could still effectively control the bank, but it would be, the bank managers would be freed from a lot of procedures regarding recruitment, etc. The public sector banks are actually regulated both by the Reserve Bank and by the Ministry of Finance. Now, in my view, and I've had this for some time, I don't think that Finance Ministry control over the public sector banks is adding any value at all. I mean, I personally feel that, and this has been recommended, by the way, by expert committees. I think the Narasimham Committee way back in 1997 had said that we should take government ownership below 30%, and essentially government can appoint nominees on the board, but they don't have to be government officers. So actually the Department of Financial Supervision, what used to be called the banking division, can even be abolished.
All right, that was an exclusive conversation we had with Montek Singh Ahluwalia, but the important date with the GST Council meet would be the 10th. I think we understand that the GST Council will be meeting this Saturday for the 26th time. CNBC TV18 learns that the Council is likely to finalize the broad principles for the simplified GST returns form. What we're also given to understand is the Council will extend the deadline for filing the simplified form GSTR 3B by 3 months. We spoke with GST Council member of Goa, Morvin Godino. Let's listen in to what he had to say. We'll also watch out for ITC because maybe there would be discussions on rates as far as tobacco is concerned too.
This particular thing was discussed even in the last council when Mr. Nilekani came and gave us a presentation. Right now, as the group of officers also will meet and discuss this plan, there are 3 different plans given. So what we will adopt ultimately will be decided by the GST Council. The whole essence is on the simplified new system of return filing, which will set new standards and in the functioning of the whole GST mechanism as such. This is what we intend to do.
Well, TRAI Chairman R.S. Sharma has expressed his disappointment over incumbent telecom companies challenging the telecom regulator's recent tariff order on predatory pricing. In an exclusive conversation with Ashmit Kumar, Sharma said that fixing tariffs were entirely in the telecom regulator's domain. Not just that, Sharma also said that it was unfortunate that telcos are creating rhetoric than availing of legal remedies.
Ultimately, if as a consumer you don't understand what the tariff is, you will be cheated, right? So therefore, it is keeping the consumer at the center of this entire debate. Unfortunately, we all talk of TSPs or XYZ. We don't talk of the consumer so often. The appropriate course of action for that entity should be to approach an appellate forum, which is the Honorable TD set or the Honorable High Court or whatever, depending on what kind of order it is, what kind of is it regulation or it's a TTO. So therefore, I find this not really a great idea that you first criticize, make allegations, etc., etc. I mean, that's not the way things should be done.
Okay, then let's stick around with the telecom sector itself. The cabinet will also take up proposals by an interministerial group on deferring spectrum payments by telecom companies today. Kritika Saxena is here with more. Kritika?
Well, you know, there were 4 large recommendations that had been submitted by the Interministerial Group on Telecom as well as the TRAI, which in a sense will bring in a minimum of 50 to 65,000 crore rupees of relief for the entire telecom sector. Telcos may argue that's not enough, but something is better than nothing. So, yes, the cabinet will be taking this up, and we understand from our sources that amongst the recommendation, it includes the IMG's recommendation on extension of deferred payment period for spectrum bought in auctions from 16 to 10 years, replacing PLR with MCLR for delay in payments by operators. Remember, the spectrum cap issue had been referred by the IMG on telecom to the TRAI. So the TRAI had then gone on to recommend the removal of the intra-band cap of 50% on spectrum holding by operators in a circle, and they had suggested that operators be allowed to hold 35% of total spectrum assigned in a circle from the current 25%. So these 4 broad norms are going to be taken up by the cabinet, and if it is cleared, yes, up to 65,000 crore rupees of a relief.
Thank you, Kritika, for that. But moving on, the auto major Tata Motors unveiled its e-Vision concept sedan, the H5X and the 45X at the Geneva Motor Show. The company was also in the news after market regulator SEBI asked it to conduct an internal probe into the leakage of price-sensitive financial information about the company on WhatsApp. In an exclusive conversation with CNBC TV18's Ronald Joy Banerjee, the CEO and MD of the company, Ganta Bishek, talks about India's EV policy and outlook for the company going ahead.
The division into an EV policy is something that needs to be rethought, not because the automotive industry doesn't know what to do, but I think we need to provide certainty to the private sector that's expected to actually invest in the build of the required electricity infrastructure. Because it's a huge pre-investment, which is all built on the assumption there's a rapid growth of electric vehicles in the Indian market. In order to give the ones who invest today in the mid, and it's not even on the short term, in the mid-term to long term, a fair return on this investment. And that all goes with the question, what is the volume, what is the future economy of scale of electric mobility in the Indian market? The future is all about leveraging these two platforms or these two architectures, where we will spread our wings across different market segments in order to improve our presence in the Indian market, in order to boost our volumes. With the volume, we will improve our economies of scale, which help us to improve our competitiveness. And as we become more competitive, we can also play in passenger vehicles more aggressively than what we have done so far. We are going to continue the journey as far as the new launches are concerned. We have a rich pipeline of new products.
Recovery underway in the Asian markets as we speak. We're getting early rates coming in from both Hang Seng and Shanghai. Hang Seng's opened with a gain of about 60 points. Now it's up about 30 points. The Shanghai too sitting with a gain of about 0.25%. The Nikkei has broken into the green, fairly into the green, up about 1.2% from the low point of today's trading session. The Korean index still holding with gains of about 0.5%. A mild bit of red tick seen on trades, though off the day's low there too. The SGX Nifty, well, it has recovered about 172 points from the low point of the day, broke into the green briefly, but still on flat terrain. So that is something we will keep an eye out on. But let's move on to a CNBC TV18 exclusive now. Sources say that Bandhan Bank will soon come out with an IPO. Abhishek Kothari joins in with all the exclusive details. Abhishek, what are the valuations that they're seeking, and does it have an impact on any listed stock?
Well, exactly, Mangalam. Good morning. Now, sources tell us that the issue of Bandhan Bank will open in mid-March post the ROC approval. Now, the register of companies or the ROC approval is expected this week. Now, book running lead managers are Axis Capital, JM Financial and Kotak Capital. The price band of this issue is likely to be between 364 to 375 rupees per share. So, overall, Bandhan Bank is looking to raise about 4,450 crore from the market. So, expected market cap based on 10% dilution that they are seeking will be more than 44,500 crores. Let's look at the valuation, how the valuation pans out for Bandhan Bank in terms of its IPO listing. If you look at the FY18, the price to book value is close to 4.8, while if you look at the FY19 valuations, they are close to 4.2 price to book value multiple. That is post equity raising net worth that I have taken into consideration. Now, as you mentioned, what impact will it have on listing peers? Let's have a look at the valuation comparison between listed players. So if you look at Bandhan, it will trade at 4.2 times FY19 price to book value, while on the other hand, Ujjivan and Bharat Financial, Ujjivan trades at 2.2, while Bharat Financial trades at 3.8. The fair comparable, listed entity is Ujjivan because Bandhan has a high presence in West Bengal, while Ujjivan also has the highest in terms of percentage exposure in West Bengal, close to 14% of its book being in West Bengal. So the likelihood comparison is to Ujjivan, where a valuation rub-off can be seen. Back to you.
Okay, Abhishek, thank you so much for that. But let's slip into a quick break now. When we come back, we'll discuss the cues to watch from the futures and options. Well, let's shift focus to the world of commodities. And Manisha Gupta is joining us now to get us an update from all that is happening in the world of commodities. Good morning, Manisha. Over to you.
Thank you so much for that. Well, it really does boil down to the US dollar index, which has fallen to the lowest in 2 weeks. That has been supportive for commodities. Well, the markets are looking at no safe haven buying right now. The North Korea is willing to hold talks with US on denuclearization. South Korea wants to hold summit with North Korea, first time in more than a decade, and that seems to be putting pressure on the dollar. Also, the European Central Bank might drop easing bias at policy meeting that happens tomorrow. There's just too much happening in the global markets, and that's impacting the currencies and commodities as well. The best of the gains in the overnight market have been seen in case of the gold and silver. Gold prices essentially gained almost 2% in the markets overnight, and we are holding firm in the Asia right now. In the base metal space, well, you have seen copper prices gain to the highest in 1 month. It is about, again, weak US dollar and strong China demand estimates that have been supporting copper. No such luck for zinc, which is trading at the lowest since the month of December, and that's because of the increase in warehouse stock on LME and Shanghai as well.
All right, Manisha, thanks a lot for that. Let's get a quick handle from the cues coming in from the F&O space. Rather interesting cues, to be honest, because if you take a look at what took place in the markets yesterday, the sharp sell-off that we saw in the last hour of trade, so to say, the F&O turnover was fairly high at around that 7 lakh crores mark, but the FIIs post that we got the data, and they went shopping. They bought in the cash market to the tune of 620 crores, bought in index futures, and also bought in stock futures. So maybe explaining the fall could be perhaps on account of unwinding in the index futures position itself, rather stock futures. So F&O space was one which caused the damage yesterday. In index futures, the FIs added some longs, and in index options, they bought some puts and also sold some calls. So some protection sought in the index option space while they're buying some in index futures as well as stock futures. Importantly, we saw some writing on the 10,300 call. So let's see whether that mark is breached today or not. But on the lower end, of course, the 200-day moving average is important.
Okay, so that level is clearly the important thing to watch out for. But that's all the time we have on Power Breakfast. From the team and myself, thank you so much for watching.